Hello everyone and welcome to today's Daily Report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 5th of May. We've got a slight improvement in risk appetite today. We've seen some swings actually in markets over recent days where risk off at back end of last week. We saw suggestions that the Trump administration were sort of debating how or whether to punish China over its role in the COVID-19 pandemic. And those suggestions have been backtracked on today, or overnight, I should say, and that helped Wall Street rally into the close. And then again, we've seen futures higher today by around about 1%, just underneath 1% now. And that has sort of helped to stabilise risk appetite again. Other factors we've got playing out in this session is the German Constitutional Court has made a ruling on the asset purchases of the ECB, and it suggests that it's not happy with it, and it says that unless it basically it's given it 3 months to make necessary changes. Otherwise, it doesn't look great for the German Constitutional Court in terms of ruling against the ECB, whether it's the legality of the asset purchases that it is undertaking. So it sort of hit the euro a bit. It's about 50, 60 pips down at the moment. It is the big underperformer of the day now. And that has helped to pull the dollar index back higher again. But you can see these choppy moves in the dollar index in the last few weeks. It tends to go for a week of strength, then weakness, and then another week or so of strength, and then another corrective move. So it's just ticking higher at the moment, and this choppy risk on, risk off phase for the dollar is set to continue, really. But at the moment, broadly, this risk appetite picking up with treasury yields starting to rise. And that is sort of playing into this risk rally that we've got with equity markets all rebounding in the European session today. Interestingly, as risk appetite has started to pick up, it seems as though that gold is starting to trade more of a safe haven play once more. Gold falling back underneath $1,700 today. We've had the Reserve Bank of Australia decision overnight. No change on rates. The Aussie has been a pretty decent performer today, though, because the RBA seemed to sort of leave. I mean, it was obviously predictably very cautious and very, very concerned about the current situation of the global economy, but it seemed to be fairly upbeat in terms of going forward. So the Australian dollar has maintained an element of outperformance today on the back of that. Oil prices are positive. We've seen the Brent crude and the so that's WTI, and then Brent crude picking up nicely again. Brent crude 7% WTI almost 10% higher. So looking pretty good for the oil price recovery at the moment, and that comes as these economies start to reopen again, and then demand levels will start to pick up. So in terms of data points today, we're looking at the PMIs for the services sector for the UK. Came basically in a little bit of an upward revision, but still pretty terrible data we saw for the UK this morning. We saw 13.4 on the services, 13.8 on the composite PMI final. That's a run rate of around about 7% negative on growth for April, which is certainly not great. Into the afternoon, we've got the US data, ISM non-manufacturing PMI 36.8, so obviously way below where it saw last month at 52.5. And it'll be interesting to see how the markets respond to that. Now, my chart of the day is silver. Now, silver has been starting to fall away in recent times. The downside pressure seems to be growing as well. Look at those candles, which are putting pressure on a daily basis on the 1470 breakout level, that old reaction high, 1470, that old March high, which has basically become a support, hasn't it? Since then, the breakout support now close below that would be a negative move. And look at these momentum indicators, bear crosses on MACD, stochastics falling away sharply. Also the RSI multi-week lows as well. All these calling basically for a downside break of 1470, and if that were to be confirmed by a breach of 1448, then it really would start to turn corrective. Lower highs, lower lows, and that would be a sort of a move that you'd be quite worried about if you're certainly long of risk, I think. 1378 is a support there on the key level of support from the late March low on silver. You can see here on the hourly chart, just putting pressure consistently now to the downside, negative configuration across momentum, MACD underneath neutral, RSI failing underneath 60, sort of faltering support around that sort of 14, it's about 15, big figure really, 1505 basis of a new resistance overhead, and consistently trading about under that, you'd suggest 1470 comes under pressure there. So yeah, it's not looking all that great. Although it hasn't made the decisive downside break yet, the pressure is certainly growing. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and you can go to our website where you can sign up for our webinars.